All right, good morning, everybody. So today's Tuesday, June 24th, 2025. I'm going to double check to see if I'm live at the moment. That'll confirm. Okay, so let me see this again. Refresh for me, buddy. Come on. Doesn't say that I'm live yet. Maybe something's wrong. Okay, you know what? Now it says that I'm live. Okay, so welcome back, everybody. Welcome back to another video, another market watch party. I'm gonna be just looking at the markets today, and I have been so not caught up with what's been going on lately. I know we had this buy side liquidity that I've been aiming for weeks now. Um, Not only because there is relative equal highs, but also because it matches with my long-term perspective about the market. So the way I trade is I rely on to see on. I look at the market in terms of what's balanced and what's not. So the way that I've been forming my, I guess, analysis is by looking at the market and comparing it candle by candle. So, for example, this is the yearly. Let me make sure. Yes, this is the yearly profile, and I'm comparing 2023's year versus 2024's, and seeing how that structure can help us predict what the price is going to be doing this year, 2025. And in 2024 and 2023, we've created this balanced price range up here in the form of this order block. So the external ranges liquidity are as follows. We have this low to this high that we're trying to get at. We had this little mini balanced price range over. So what do I anticipate price to do? I anticipate price to use this as support to create higher prices. We can either hit the high, the medium threshold, or the low of the order block. In this case, we dip down to the low, grabbing what? Grabbing sell side liquidity in the form of what? Buy stops. So there's people here gonna get the buys, and up higher. And then we divvy up this format and create a little mini range. So from this low to this high, to this low to this high, we have a what? Balanced price range from here. This all was sell side delivery met with buy side delivery. This area is now balanced. Now we're creating what? Same thing. Got the lows here, got the lows here, the 30 and 60. Now the goal is to enter this external side range liquidity. We still have these dealing range from up here to up here. And I've been watching this guy's videos, and he's been talking about the differences between type 1 and type 2 dealing ranges. I really like that because when I would analyze the charts, I would have a bunch of dealing ranges, and I just wouldn't come up with a way to like decipher what's what. And I'm glad that I saw this guy's video because in a way it kind of puts things down into perspective for me. It makes me more organized in the sense that now I have some labels for my dealing ranges because there's a type 1 and a type 2 as he mentions. Right now what I'm seeing is the type 2 dealing range from this high to this low because we took out this buy side liquidity, this sell side liquidity. And so now we're just waiting for the market to create a new expansion in the form of what? Taking out external range liquidity from either this side or this side. But since we have equal highs up here, that's where it looks the best. Why? Because retail is taught that double tops is a good form of resistance. So place your stop loss up there. So what's pending down here? Buy side liquidity in the form of sell stops. So retail's going to be thinking, we're not gonna see price go up here. So let me set my sell orders here. Sell orders here. So that's where I have the stop loss. I'm going to be aiming to go up there. That has been the plan this whole time since I've been analyzing these charts. But because of what's been going on lately, yeah, we might see like a small fake out where like we thought we were gonna go up there and then maybe retrace a little bit. Because look, we still have let's see, we still have this whole other half to complete. From July 7th all the way to New Year's, we still have this whole other half to complete. Right now, this is just a narrative at this time. And that's the thing, at this time, that's what I'm currently looking at. Yeah. So from here to here is what I'm looking at. And so from here, there you go. Low, high, low, low, bit lower. Yeah. That's what I'm currently at to meet up here. So by July 7th, I want to see this price actually move up to meet these stars. But because of what's going on lately. All right. Let's see. Sorry, I'm a little mixed up. Again, I haven't quite caught up with my markings as well. Trying to keep things updated, posted. So let me just take a quick moment here. Yep, it's still relevant. I'm gonna move you up here, drag you up here. There you go. This makes more sense. Okay. And now, what imbalances exist from this range onward? Let's take a look at the weekly. See that? We have that SIBI right there from February 24th. Very, very important. Why is that? Because it's inside the range of the 20 unit perspective. So this is what I mean. If you're watching the live stream, thank you. I want to show you this, that based on my back testing, whatever imbalances exist inside this 20 unit range is what's going to help us get used to meet external range liquidity. So something in here is going to help us. Something an imbalance in this range is going to help. Is going to be used to help us reach either this external range or the external range in the bottom. And lately, the way it's been behaving, I really do think we're going to reach this. When? Till July 7th. So is this imbalance I'm going to refer to up till September 8th. Okay? So until September 8th, I'm going to be reusing this imbalance right here. So we could like grade this. Let's see here. Let's go to the daily. See, that's that imbalance I was telling you about. What's this? Sunday open, ultimate goal, quarters with macro. Yeah, we don't need this right now. All right, so this is the Sunday open. All right. This is good. This is good. See how price is like reaching up in there into a hurry? Let's compare this to the, I don't know, the ES. So we have lower low. Okay. Look at that. See, that is very minor. And that's another thing I learned about this mentorship too from this guy, from this YouTuber. So it's good stuff, man. I mean, it's really putting some things together for me as well. So look at this. See how this low on the next day on Monday? Compare that to this low here. I'm looking at the way it closed. I'm sorry, at the way it opened. High, low, low, lower, low. High, low, lower, low. Sure. But look at the way we open. Let me look at this low. 21,650 and a quarter. Opened 21,648. 650. So two ticks down. Two handles down, sorry. 2 points. 59, 69 and a half. 64. So 5 handles open versus 2 handles. Okay. So they kind of treat it the same way. Sorry, I thought I would see this as a stop run where like the wick did the damage to reach maybe these lows here, aim higher, whereas this one didn't. That's okay. How about you see this too? Look at this low. See that? And what do we do here? Lower high. And these are positively correlated markets. Inside an inefficiency that's supposed to help us go up higher. This is good. Okay. So again, up here, that's our goal. When? Till July 7th. Now let's go up here, go back to these markings. Where is our dealing range? All this, okay. All right, let's take a look at here. Let's see. Very good. Put this away. Excuse me. Okay. Okay, so we're above the 3-month open. So I anticipate the month of June to be a bullish candle. Okay, right here. June opened as such. You've already made the low. We traced a bit, aimed up higher. This is good. Like things are pointing bullish again. This is good. I know I keep saying this is good a lot, so I'll stop. Whew, this is what I mean. Alright, but that's okay because it's not really relevant. I haven't been caught up with my markings. We have a high low, higher low. So it's balanced. We have a high low, lower low, higher high. That's also a mitigation. Look at that. Look at the way it's been used as support. From here, from that high to this low, has been met with what? Selling, sell side delivery, and then met with what? Buy side delivery. This small area here is balanced. And look at the way that price has been using that as support. Isn't that amazing? We're not even making our way down to the medium threshold of this balanced price range. Now it's just a matter of looking for what is going to be the dealing range that we're going to be referring to. Well, if we take this low to this high, right? Why from this low to this high? Because I'm anchoring it to the 30 unit BPR. So, and plus look, we have sell side delivery, buy side right there. So let's take a look at the quadrants. See how we can use this to our advantage. Notice how I went to low high, high to what? Equilibrium. So it went back down to fair value, and then it just went back up there. Okay, that's good. Okay. If we start comparing the weeks now, so where do we have weeks? Weeks. So we can remove this, get our weekly charts open here, remove SMT study. What do we have here? What do we have? We have our dealing range. Excuse me. Sorry if it's a little messy. High low. We don't count Sunday's range. So it's kind of like doing the same thing over and over again. I see. See that? High, low, lower high, lower low. This is going to be relevant till Friday. Friday at 4. So we're going to consider this as our 60U MI down, or mitigation block down, or failure swing down. So I don't see the need of extending this to the right. There we go. Same thing here too. High, low. Lower high, lower low. Now what's this? Now we have a breaker right here. High, low, lower low, bullish breaker high. So from here onwards, let's got the low. Let's go up higher. Okay, that's good. What's the point? The point is that right now things are not looking good if you want to be a buyer. We want to wait this thing to go down into discount, and right now it's a good premium pricing. I'll have to keep up with the. That's the weekly. Where's our dealing range? We could use this low to this high. Yes. Okay. Now let's go day by day, right? Look at that. In a way, that is a good dealing range up there too. And we've been extending it. Great. So we've made a new high. I would like for price to come down to 75%. So that's from here, from this price all the way down here, and then go up higher. Why? Because we've constructed a new high. The external range liquidity ended up here, so price went up a little higher. Okay, and it's just a matter of retracing to 75%. Keep going up higher. That's an entry idea that I used. I used to back test, and that would usually happen. And it's a great form of manipulation because it could scare out the shorts. I'm sorry, the longs. Where is my ultimate goal? Oh, of course you're not going to see it. There you go. That's what we're ultimately trying to get at. Okay, and you know what? Something else that's good? The freaking calendar. What's there this week? This week from here to here. Apply settings, filter, just want the orange and red folders. So today we have hmm, this guy talking at 10 a.m. Well, that's tomorrow. Today's Tuesday. Snap. So what do we have today? Yeah, no, he's gonna talk today. 10 a.m. He's gonna talk again tomorrow. Then we have unemployment, GDP. Okay. So the plan is to get into this level 22 to 22. Let's take a look at the this for lifetime price action. What do we say? It was from this high to this low. Okay. Broke up this high. No. Okay, interesting. Broke down this low. 3-bar pattern. Nope. Overblock. I kind of wanted to just live stream till 10, but since we have 10 a.m. news, I kind of maybe stick around like another 10 more minutes after. Okay, so for CFDs, we're trying to get up to 22 flat, 22,000 flat right here. This is 22,000. Oh, that's crazy. All right, so we'll see the news here in a couple of minutes. We could also look at the structure compared on in the hourly time frame. Yeah. So as such, we have here the 9:30. So we'll do 7. Nice. There you go. Can we still go to 2200 flat? 2200 flat is down here. I still think because that's down the dealing range down here. So we could do something like this. I believe it's 10 o'clock in a minute, so we can still do something like this. See that? Ten seconds. Okay, so 10 o'clock. This guy should be speaking now. Fix that real quick. Right, 10 o'clock. This guy speaks. 10 a.m. Dipped into discount. Okay. We're back to 22.85. Okay, not bad. So we went back down to equilibrium. Got this. Turn up higher. Let's take a look at the SMT here. Get rid of you. Put this guy on. Great. Trading view. What are you doing? Oh gosh. Okay. Let's see. Visibility. Move to existing pane below. Okay. That's a little annoying. Interesting. Look at that SMT. Check out the That would be a very interesting scalp right there. It's also 10 o'clock now, so what's the kind of structure that we're dealing with? Alright, so I'm gonna just leave it at that. I have to go a couple minutes after. So I'll catch you guys in the next time, alright? But I think we're gonna be trading down here to head up higher. We'll see what happens.